Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we've got another trade breakdown video for you, this time on a trade I took recently on pound yen for roughly 200 pips. We'll go through the complete trade, the analysis beforehand, the entry, the management, the exit, all of that will be covered today, so make sure you stay to the end of the video. But yeah, guys, if you are enjoying the content, please be sure to drop a like on the video, subscribe, and yeah, guys, let's just get straight into it. So as you can see, we've got pound yen here on the 4H time frame. This is the trade we'll be breaking down. Might as well just start with the replay tool. Let's take it back before the trade so I can share with you my thought processes, how I form my bias, and then we can go through the entries, the management, and the exit, of course. So this is pound yen in the 4H, but I do start with the daily just to work out the higher time frame scope, the higher time frame bias, and then I do all the nitty-gritty work on the 4H. So what I got from the daily chart was the market was bullish. We were seeing consistent higher highs and higher lows. At the time, the yen pairs were flying. We just created a high around 184, sorry, and I was looking for a pullback for the market to go back and take out the highs there. So that was the plan for pound yen. We recently had quite a quick flash crash sort of thing with the yen pairs. We had a very big aggressive move to the downside, followed by an equally as aggressive move back up again. And when I saw this form here, especially when price went and took out this high here, I quickly labeled this as a big fake out in terms of the market taking out traders with stop losses up below these two swing points, and then quickly reversing back to the upside, grabbing that liquidity and then using that to continue to the upside. So that was the idea with pound yen, just a simple fake out of the market. I knew it was in the same direction as the higher time frame bias. I'm expecting price to eventually come back to the highs here and probably see some new highs. And now we've got that big fake out to the downside, taking out a lot of stop losses. Now we have a pretty high probability that the market will come back into that 184 high and probably take it out. So the plan for the trade was definitely looking for the next higher low. I remember before this big dump to the downside, I was actually looking for a higher low in this particular area here because we started printing these higher lows. So I was looking to try and get into one and then take the trade back to the high there. So that was the original plan with pound yen. However, we had this quick dump to the downside, which again didn't give me any sign that the market was going to form a higher low there, so there was no trade for me. But then after this quick dump to the downside, followed by an equally as aggressive move back up again, I was like, okay, the market has just faked out these lows here. Most likely, if we do come back here, we could see that higher low come into action, and then look for our longs on that same area. Because when we do get fake outs of trend lines or support resistance levels, when we do come back inside that level, it normally acts as a very good level to buy from. And that's kind of how we get our head and shoulder patterns or our inverse head and shoulder patterns. When we do have that support level, the market fakes it to give us that head or inverse head and shoulder pattern here, and then we retest to get the right shoulder, and then we look for our buys. So this was the plan for the trade, to try and catch that next higher low and anticipate the continuation to the upside. And that's kind of what we had here. So this would be the left shoulder, this will be the head with the fake out, and I was looking for the right shoulder for push to the upside. So that was the plan for the trade, try and catch that next higher low. So now I need to look at my area of confluences and where I'm actually going to plan to take this trade. So we had a lovely level of support here. So this was the support level that the market was holding on to just before we had the crash to the downside. Now we came back above it, had a slight retest, another big impulse to the upside, taking out these highs. So I knew that if we came back to this area, we probably had a good probability of the market holding it, and of course we do have a nice trend line confluence coming in that vicinity too. So I knew that my confluences line up at this particular area around 180, 500. So I was looking for the market to come back and retest that. I wasn't too sure if we would see such a pullback at the time, but we had this big sell-off with a very big bearish candle, if I remember, yeah, very big bearish candle coming down straight into that area. So as soon as I saw that, I was like, okay, we're coming into the area of interest. I'm expecting a higher low to form here to continue that higher time frame bias and look for that kind of right shoulder, that higher low after this big dump to the downside. So this is where I started looking for my entries, and when I look for my entries, I drop to the hourly time frame because I want to make sure I can try and maximize my risk to rewards. I don't look for my entries on the 4H, even though that's where I do most of my analysis. I drop to the hourly to try and maximize my risk to reward, get a slightly tighter stop loss, and of course kind of stretch that reward a little bit. But all I'm looking at on the hourly time frame is for a shift in momentum, normally in the form of bullish or bearish engulfings. Of course, in this case, I'll be looking for a bullish engulfing candle. So pressing play with this one, the market was kind of, I think we had some news at the time as well. The market was kind of respecting that area, throwing wicks either side. So it was actually a good sign. When I see the market start throwing wicks at my areas, it's a good sign. It means the market's reacting to it. It means the market's finding it difficult to break through. I wouldn't say it's an entry signal, but it's a sign that, okay, the market is actually respecting our areas, because sometimes price will get to my levels and just completely break through and keep flying or falling, depending which way it's going. So if I can see some wicks, the market's showing signs of slowing down, indecision candles, dojis, that's all a good sign to me. It shows that the market is actually respecting my area, but not quite ready yet for entry. So I'm waiting for a strong shift of momentum, and eventually we do get it in the form of a nice bullish engulfing, not quite yet, and there we go. So this was my entry candle. I hopped into some longs there on the candle closure, stop loss just a few pips below the low for some wiggle room, and I was looking to try and catch the next swing to the upside back to the high. I was being a little bit conservative with my take profit. I could have stretched it a little bit further into the high there, because again, I knew we had this big fake out to the downside, grabbing liquidity. This most likely is going to be our next higher low. So, you know, in terms of market structure, there's a good probability we're going to get back to that high. So I could have been a little bit more, a little not greedy, but a little bit more aggressive with my take profit and try and stretch a little bit further back into the high. But I was more than happy just to take it back into that relative high on the 4H time frame, just in case we found resistance there again and came back down. Because again, it's all about probabilities. I don't know where the market is going. All I can do is predict areas where we have a good possibility of reacting from and seeing a move up or down. Whether it will get to my TP or not, that's a different question. So I do tend to go for more conservative targets, but looking back, maybe I could have stretched this one a little bit further, but that's besides the point. So that's why I got my entry on the hourly time frame on that nice bullish engulfing candle, stop loss a few pips below. My first target for the trade, because I do use a partial management system, as I take partials, small size of the profit off the table, move my stop loss to break even when we do get to small levels of support and resistance, just to protect my trade and protect that drawdown, and then let the trade run and see if it will hit my TP or come back and take me out of break even. So for this trade, this was my level that I was going to take some profit at, close some profit, move my stop loss to break even, and just let the trade run. So we came very close to that area originally. We had a really nice push to the upside, so the trade started pretty well. But we failed to continue that momentum. The market came back for another retest of that same area. So at this point, it was looking good, but then it came back into some drawdown, respecting the support level. I remember I held this trade over the weekend as well. Yeah, I think we closed like this for the weekend. So it wasn't looking too good going into the weekend, but the market held that area. And we saw a nice shift of momentum and basically just a double bottom at that particular entry point. And then the market found some nice momentum and came and hit my first target there. So this is when I took some partials off, moved my stop loss to break even, so took the risk off the table and then just let it run either to the highs up there, or if it wanted to come back down and take me out at break even, perfectly fine. I still walk away for a small profit, so happy days. So after this press play, the market did move to the upside quite well. It had a very steep correction. I thought we were going to get taken out and break even at this point, but again, I'm very laid back with my management strategy. Some people are a little bit more aggressive. They try and look into every candle and every single move. They try and, okay, let me quickly get out now, or let me add some more positions in. I'm very relaxed. I know where my target is. I know where my first target is for my partials, and I kind of let the market do the heavy lifting. So again, from here being very close to my take profit, all the way down here to being very close to break even, wasn't really too bold with the trade, because like I said, we already banked some partials, so we already got something to show for the trade. But yeah, if it was going to be a break even, it was going to be a break even. But luckily for me, the market came back up again and eventually hit the target and took me out of the trade for a win. Like I said, could have been a bit more aggressive with the target up at those highs, but again, I'm perfectly fine. I followed my plan to the T and took my profit at those highs there. So it was a very simple trade, just trying to catch that next higher low. The key kind of catalyst for the trade definitely was the big fake out here to the downside, because all I was doing was catching the next higher low. We had one over here, second over there. I was going to look for the third one in its vicinity. It didn't happen. We had a big fake out, but then after this big fake out, taking back at those highs there, I knew that if we were to revisit, there's a good probability we would form that higher low, just because we've taken out so many traders here to the downside. There's a good chance that the next high we're going to take out would be this area. So my direction, my bias was definitely up. All I'm doing is finding a good place to do it in. So that's where I got my entry. That's where I entered the market. That's where my first TP was. And the final TP was coming back into the high here on the left, taking out the trade for roughly it was like a 2.7, I think 2.7 or 2.8, something around that. But of course, not quite that, because I took my partials as well. But very good trade, happy with the trade, played out well. Like I said, it could be a bit more aggressive with the TP, but again, that's just me being nitty picky. But of course, very simple trade. Again, trading doesn't have to be simple. The key elements about my trading is follow that higher time frame trend and looking for areas of value, areas of confluence, and getting in on nice shifts of momentum on the lower time frame. So if you have learned anything in this video, please be sure to comment down, tell me what you've learned. If you have enjoyed the content on the channel, please be sure to drop a like and subscribe. I really do appreciate all the kind messages you guys do leave on the channel saying it's helping you guys. That is music to my ears. But thank you so much for watching the video, guys. Have a great weekend, and I'll catch you all in the next one.